Flavia, thanks for coming and hanging out with me.
Absolutely, Anthony. It's great to be here today. Thank you for inviting me.
Oh my God, of course. So just a little bit about us. We had just started working together a few months ago, which is super crazy. I just got into loans, and you've been in loans for a long time. So I actually don't know a whole lot about you. So what I'd like to do is just figure out who you are, where are you from, what got you doing what you're doing, and what's your story?
Absolutely. Well, I'll be happy to share. I am originally from Brazil, Rio de Janeiro. I moved here to San Diego when I was a teenager and been here ever since. Came to stay for 6 months and learn English, and the rest is history. Well, it's a nice city. So, and I started doing loans fresh out of college. It was a recruiter that put me in touch with a company that was hiring, and they wanted junior loan officers to train. And she said she thought it was going to be a great fit for me. I knew nothing about mortgages at the time. I didn't even know exactly what they expected me to do and what I was going to be doing. But surely enough, she was right. It was a great fit for me, and I've been doing that ever since. And it's been 20 plus years.
You know what? We don't need to know how long. It's all good. So you went from Rio to Rio. That's crazy. I actually had no idea. So
Yeah.
I'm pretty stoked about this. So you went from Rio to here in San Diego?
Yeah.
What?
Yes.
Okay, so how was that? And you were how old?
I was 18.
Oh my God! So you're like, I'm done. I'm going to the United States. I'm going to San Diego, and that's it. Like I'm going for 6 months.
Yeah, 6 months. And then the 6 months were up. I'm like, I'm going to extend 6 more months. And then the 6 more months were up. And then my parents were like, well, are you coming back? I was in law school back home.
What?
And yes, and I really enjoyed it. So it was a difficult decision for me at that point. But my parents were supportive and said, if you want to stay there, that's okay, but you need to continue your college education. So I basically started over at San Diego State. I had to choose, I know.
Me too. I love it.
I had to choose another major that would be more appropriate. So I picked international business and finance.
Smart.
So that was more appropriate with, living abroad and all that. And then one thing led to another. Yeah. And here I am.
I love that. I mean, so you seem so personable. I could totally see you like in the law, like doing, what kind of law were you going to do? Like super sidebar.
I wasn't sure, but I really would like to do, court stuff and trials and things like that. I enjoyed speaking in public. That was never a problem for me. And I also liked writing and putting together logical ideas and sort of making concepts work in a way where you can explain it to people. And I think that that's what I love about mortgages, is that I am able to explain concepts that can be so foreign to people that are not in this industry, and I'm able to break it down in a way where they will understand whatever level that they are. I think I can connect and break it down that way. So I think that's where those skills kind of transferred.
Yeah, that's so tough, especially, if coming from the law. I was really big into contract law. So I really understand, putting the pieces together and getting the formations together, and not just conceptually, yes, but conceptually was great, but actually having the connections of, what connects to what, how do those paragraphs, indemnify or protect or whatever it is, right? But at the end of the day, you are communicating not in the law side, but you're communicating in concept side for helping these people get loans. And what I really find fascinating is you from Rio, so you obviously speak more than one language.
Yes.
Tell me, come on.
Yes. So my first language is Portuguese, and I've studied English basically all my life. But, when I came here, English became my first language because, I've been living here. And then through college, as an international business student, you need to choose a language to go along with your major. So I chose Spanish because living here, I felt like that would be important, an important language to know, not only for business, but also to connect with people. And it was a great choice because the core of my business ended up being Spanish-speaking clients that, although they could speak English really well, when it came to discussing these types of matters, they prefer to sit down with someone and speak in Spanish. So
Right.
that really opened up possibilities of more people that I could help. Yeah.
That's not a far jump from Portuguese to Spanish, right?
You know, those two are very similar languages if you're reading, but when you are speaking or hearing, it sounds so different. Because people talk faster, slangs, and the way to pronounce the words is different. So it's not, if you speak one, you don't automatically understand the other. It will be easier to learn the other, but yeah, I still had to take the classes and go through with it, and yeah.
That's great. So you graduated San Diego State. Go Aztecs. So, just making sure everybody knows. Go Aztecs.
Yes.
So graduated from state. You got into the mortgage business. Who was the person that was like, you, me, we're doing this? Like, who was that, and how did that happen?
Well, when I first left school, college, I was going to get into life insurance and financial planning because I've always liked the stock market, and that was always fascinating to me. So I thought that would be a good area to go into. But it is a tough start as a college student, especially if you're a foreigner and you don't have, family and here, because that's kind of who your first clients tend to be.
Yeah.
Family, friends of your family, and I didn't have any of that. I remember when I started in that business, they were like, well, write a list of people that you would invite to your wedding and, see if you can talk to them about life insurance. I'm like, well, my friends now are waiting tables. They don't even have health insurance. How am I going to tell them? That's when I knew I was probably in the wrong business at the time.
But that's how, like, real estate and mortgages and life, I mean, it all stems from who would you, like you said, who would you invite to your wedding? Well, shit, they're all in, Brazil.
Yeah.
So I totally understand. So getting started literally fresh is so crazy. It's so, it blows me away. And I'm sure anybody else who can hear your story would be like, there is no freaking way. Like, imagine me getting up and going to like Belgium or going to like Germany and saying, you know what, I barely know the language. I don't know anybody here. I'm going to start from scratch and I'm going to sell you your house. Like, what?
Yes. They'll be like, why you? Sorry.
You're good.
Yeah, because they have other people that they've known all their lives, and there you are, especially fresh out of college. You're in your early 20s, So it was kind of a challenge, and then mortgages were easier because it's a different type of service that you offer. The benefit is immediate. And if you present something that makes sense to somebody and that will help them, and you explain it in a way that is clear, there's no reason why they wouldn't trust you to proceed.
Right.
So I felt like it was a better fit, and I liked it more too.
Yeah. The money was better too.
Absolutely.
Yeah.
Absolutely. And it's just more dynamic. You talk to more people, you work with different situations all the time, and trying to put, deals together that will make sense for your clients, and always having different scenarios come through. There's not a dull moment, that's for sure.
I know. I was just getting into the mortgage business myself because I've been a broker for 11 years at that point. And I was joining with Johnny, and I was just starting to kind of get my feet into the group, and I was on my own for so many years, and it was so hard because, when you're soloing this thing, it's brutal.
Yeah.
It's brutal. I mean, to do your own marketing, to have your own business. And I was running 3 other businesses at the time. So to have support and to have those people around me, I was like, man, I can't lose at this.
Yeah.
So I started, Johnny said, hey, we want to do mortgages. And I said, okay, well, I'll get the license. I'll be the broker for both. It is what it is. And that's where I started really kind of, taking off. When I was taking the courses for it and looking at it, I went, oh, I'm doing it wrong. I'm only going on real estate. Real estate is reliant on one thing, getting that loan, getting that person to me. Because if I have a borrower that says, yeah, I qualify, and they, it's just a piece of paper, right?
Yeah.
They can Google that, and it's all good. But to have a real qualified buyer doesn't start with me. It starts with the application, starts with the loan. And I was like, I am totally going about this backwards. And the second that door opened, my first loan, I was doing a transaction, and I had this, I had this borrower. I'm going to try not to use all the names, right? So I got Linda. So Linda wanted to buy this house, and she walks in, she goes, I love this house. I got to buy it. And I said, no problem. I just started, the tax returns, the W-2, all the minutia, got her the application. And then I pulled her credit, and she just bought a $200,000 Porsche. And I went, okay, got it. All right. Okay. So you're out. So I said, do you have anybody else? And I started adding her brother, right? Her brother came in, and then her brother ended up having more debt, even though he was a VA. So we went to 2 different routes there. And then the brother only made enough money. So we brought the dad in, non-owner occ, co-borrower. And I was just like, what am I doing? I was this crash course in a matter of it was like 3 to 6 months of right after I got my license. And I went, I'm getting punched in the mouth like I was when I was 21, and I just got my broker's license, and I'm getting my ass kicked again. So why is this happening?
Welcome to the mortgage business.
But I realized it's because, you know what? You always make your biggest mistakes first.
Right.
And I went, okay, all right. So we got all the way to the finish line, and I had really great help from Mary Jo. I was talking to Mary Jo and Johnny, and I was talking to lenders, and I was up stressing. I was stressing. I've never really stressed this hard in my life, where I lose sleep.
Right.
You sweat, and you're like, man, because you want to do right by these people.
Exactly.
They trusted you.
Yes. For me, it's impossible to not have that connection with my clients where, it matters to me that they get what they want. It matters to me that I try and exhaust every possibility to try to get them to whatever their goals are.
And and I mean that's we got them all the way to the finish line. You got them to docs. We were signing documents that day. We had the docs printed, escrow at the doc. It's all good.
Don't tell me something happened at that.
She goes, I want to open a restaurant instead.
What?
She canceled that day.
At the escrow table.
Dead deal. It's over. That's it. It was over.
They showed up for the signing.
3 months in this escrow. It was right after Christmas. I lost that deal. The seller had already moved to Montana and was paying a per diem to live in the house he was purchasing. Destroyed. At the end of the day, we ended up taking a cash offer for a few $100,000 less.
Wow.
That buyer and that buyer knew that seller. That's the only reason we were going and pushing that hard with that deal. But that was the moment I learned. I was like, it's just it was unbelievable.
Wow.
To see that. And I went, okay, first thing before we do anything, make sure the buyer's legit. Mm-hmm. Because I've heard a saying, my dad used to say this, buyers are liars.
Yes.
And sellers are worse. So to have good, legit buyers, you got to talk to them, got to vet them, got to get through. And I haven't had a bad loan since.
Right.
Seriously. But we have to just do our due diligence and go through it. But man, what a crazy 3 to 6 months. And that was right after Christmas. So January, I think 10th, we closed that cash offer. It was a 7-day close.
Wow.
Yeah, it was crazy. We got in, got out.
Wow. Luckily, you were able to get somebody in right quick, too.
We had to, because it was like, oh, my God. So.
Wow, what a situation. What a situation.
Have you ever worked with anybody since that have known each other? Or do you try to stay away from that?
I have I've had transactions, again, where they knew each other.
Yeah.
But the vetting happens before any escrow paperwork. So I do the loan before the transaction. And again, I'm not dual representing the real estate side, because it's a one side, it's the buyer's side, right? The seller's on the seller's side, the buyer's on my side. So I can do the loan and the real estate. But because otherwise it's a self-dealing weird thing here.
Yeah.
But to get the buyer and the seller to know each other, it's sometimes good, because then you could be like, well, tell Johnny I need an extra 10 days. You know what I mean? But it's the flip
Go
side.
have a beer with your friend and see.
The other side, I've seen it blow relationships.
Yeah, the true emotions come out.
Sure
when it's
do.
A lot of money on the line.
Involved.
Yeah.
I've seen people blow deals over $2,000,
Wow.
$2,000. They just say, you know what? I'm good. You're out. Like, it's emotional.
Yeah, it becomes a matter of principle to some people. And when it gets to the emotional aspect of it, sometimes logic goes out of the window.
Sure does.
And it's hard for us because we're just watching it all happen. We're like, oh, you're making a mistake. But there's only so much you can do.
Yeah.
Yeah, and that's the impartial part. You know, you have to be that third party. And for me, I'm so emotional about it. You know, I think you are too. We're like, we want to just help them and save the deal and save them and help them get a house. And it's all in our head. We make that story.
Right.
But at the end of the day, like, this is business.
Yeah.
You know, it's business. We want to do what's best for you, but you know, if you're going to shoot yourself in the face, I can't help you. You know, it's tough.
Yeah.
It's
Sometimes the universe doesn't want it to happen.
Yeah.
When it comes
That
down
is
to it, no
true.
matter how hard you're pressing and doing it and whatnot, and you want it to, like you said, you build this story and you're like, oh, it's going to be successful and I want to finish it. But yeah, the universe just has a different way of playing out things, and you just got to kind of like let it go, and that's what happens, and you move on to the next. And
Exactly.
Yeah.
Sometimes things don't work out for a reason, and you know, we just don't know what it is at the time. But
Yeah.
we can only try so hard until
Yeah.
it just let it go.
So where did you work when you first started? You just right out of San Diego State. And what's the first company you worked for?
The first company I worked for was Courtesy Mortgage. They were here in Mission Valley on Camino del Rio South. And I went for an interview there through a recruiter and was hired. They taught me all there was to know about mortgage, and it was great. And it was a really great place to start. They had a nice office and seasoned loan officers there that were able to coach me through and help me get my, fit in the water. And it was great. Yeah. And it was great. And then, of course, going through all the waves of the market and the pre-crash and the crash and post-crash. I think those loan officers always, refer to, are you pre-2008 loan officer or are you post-2008 loan officer? Because that was such a landmark in our career. But it's nice to have been able to navigate all those scenarios and see how it plays out.
Perfect. Yeah, I totally get it. I wasn't even in the industry yet. I was dating myself quietly. I was just graduating high school, so I'm going to leave that right there. So I was getting out of there, and I was watching this sheer pandemonium, and I was like, I'm going to go to San Diego State for business,
Right.
with an emphasis in real estate.
Yes. So within the crisis, you made the decision that's where
I saw blood everywhere, and I was like, I'm totally in on this.
I can totally see you doing that.
Yeah.
Because you have those insights. They're different than what other people have. So I can see you watching that whole thing and seeing the opportunity when everybody else was seeing a bloodbath. So
Thank you.
yes.
When there's blood in the streets, buy real estate. No, but it was very interesting because we have a family business. The family business is a debt business, so I can see the cyclical point of the debt business. And we were buying debt from banks at that time.
Wow.
And this is like 6, 7, 8. As the crashes started to happen, we had over 100 people in the debt side, and it was just. It was really bad. It was bad to watch because when everybody suffers, like there's no money moving,
Right.
And that's kind of what was happening the last year or two with the inflation. Money stops moving,
Right.
screeching halt. And a lot of people don't understand how debt and the debt markets work. They think when they go to the bank, they get the money and that's it. They just pay the bank every month. Well, that's not true. That loan is sold and sold and sold and sold, all performing debt, right? So you have these servicers, the servicers take a piece, you have the owners take a piece, you have premiums, you have discounts, you have all these different types of, the loans being sold and flipped, and you have, at the end of the day, who owns my debt?
Right.
And those people are taking the risk on you. And really what was people don't realize is that can trickle all the way down onto Wall Street, that gets securitized,
right,
cut up, and now guess who invests? Well, it's you.
Yes.
You buy, you invest in your own, right? So that's where the mortgage-backed securities got all the regulations tightened up. But now watching the consumer debt, we're over $1 trillion in credit cards. All that consumer, that credit card debt is sold and sold and sold, right? And a lot of people, I just saw this, I can't believe I saw this. There was this guy on like TikTok or Instagram, and this young kid, he looks in the camera, he goes, "Did you know when the bank charges off your loan that they can't collect on you?" And I was just like, jaw hit the floor, like, what? Who is this 18-year-old little snot nose? And he's like, "Yeah, once they sell it to the collection agency, you no longer owe the debt." And I just was like, coming from that world, I'm like, you have no idea what you're talking about. The misinformation that's allowed to happen, blowing my doors off. So,
especially in that age group, you say, tell an 18-year-old something like that, it could be dangerous.
Yeah. So now instead of people borrowing with the intent of paying it back, they're borrowing to not pay it back because they feel they have no obligation to do so. So now turning that back around to the mortgages, like, okay, well, now that we have all this vetting, all of this regulation, the Dodd-Frank, the Graham-Leach, all of this regulation.
Post 2008
yes,
regulations.
Right, the post-crash,
yeah.
right? The regulations are keeping us somewhat, protected, tracking with equity and tracking with the debt attached to real estate and the MBS, mortgage-backed securities. Where I'm finding is that now the lenders are starting to loosen their guidelines. You know what I mean?
Yeah.
We just sat with a reverse mortgage specialist. We just sat with our, second, HELOCs. I'm seeing this open up to say, okay, well, I guess we should relax a little bit. Well, what if it's non-govy loans? What if we can just open this up to whomever? Now, that does open up to borrowers, but at what cost?
Exactly.
And who's going to pay for it at the end?
Exactly, because there's definitely a higher risk associated with those alternative products that are becoming more prominent. And I'm all for it, because not everybody is going to fit the guidelines of a conventional or a govy loan. So it's amazing that all those programs are coming back, but there's a risk associated with it that I hope that they're prepared to bear, if there's default.
Mm-hmm. And so there's two people that suffered in 2008. Number one, it was the consumers. Consumers got stuck holding the bag where the banks got bailed out. Number two, it was the frickin' mortgage brokers. It's the people who were doing the loans, not the lenders, but the brokers that were shopping those loans out were the ones being punished.
Yes.
I can't see that. I don't want to see that happen again.
No, absolutely not. Yeah, no. We don't want to be the villains. We're not the villains.
And it's I'm not talking down to anybody who's going through anything, but at the end of the day, like, those qualified borrowers are becoming less and less.
Yes.
So to find these people, I'm having a hard time finding. How are you in looking for new business? Are you finding better business, more business, less business?
Well, yes, there's business, but for every client, I feel like that for every client that I qualify, there's 2 or 3 that I don't. So there's a lot of people that come to my desk with a scenario that would have been wonderful 2 years ago, a no-brainer, but now it's just not, because home prices went up and rates are high. So everything is just more expensive. And it makes it difficult for people to find suitable housing within the parameters that they qualify for. You qualify for a 2-bedroom condo, but it's a family of 6. Well, that doesn't work. So a lot of those scenarios come through my desk more often than before. But, they will be able to purchase at some point. Rates hopefully are going to come down. We can talk. That's probably a conversation for another podcast. But I feel like that situation isn't going to last forever. But it's just that's what I'm seeing now.
Oh, you know what? We should carpe diem that rate conversation. Let's do it now. So I just saw, it was yesterday, rates came out, and yesterday was I believe it was the 10th of April. So
Yes.
for context, it's the 10th of April, 2024. Shout out to anybody listening. So CPI came out. It was higher than expected.
Yes.
And what people don't understand is that, rates are tied directly to the consumer price index, and that's what's kind of driving the price of the rate, and how expensive that will be. And I'm looking at this, and I saw, FHA plummet. So I saw FHA fall
Yes.
while conventional went up, and I went, there's not something wrong with this. So you're going to give me less money down, cost me less money overall, and the price, the payment's going to be less for me. That's a government-backed loan compared to a conventional loan.
Exactly. So it's like, well, what are they predicting that it? Yes.
Yes. So that's kind of my argument. Like, well, where are they pointing us? In what direction are we being forced to go to? Right. Which, the government-backed loans are fine, but at the end of the day, who's going to pay for it? So.
Yes, it's definitely a interesting environment right now, and then of course you have the lenders sort of overreacting with the news, so they will adjust their pricing sometimes by way too much when news like that come out. So you're whoa, whoa,
Mm-hmm.
and then it tends to kind of adjust back down as we go, but. I feel like anything can happen, at least in the short term right now.
Mm-hmm. What do you think about this whole NAR thing? Have you been following that pretty well?
I do, to some extent, because since I do mostly loans, it doesn't really impact my business. But out of curiosity, of course, all things real estate interest me. So I have been following, and I want to ask you about it because my take on it is that all that's really going to happen is people are just going to have to reshuffle the way they do things. But ultimately, it will end up being the same, just different. Kind of when they did that to the mortgages and the compensation and how it had to be fixed and things like that, it ended up sort of working out this very similar way. I'm wondering what your take is on it, if you think that that's how it's going to be.
Well, I appreciate you asking.
Yeah.
So I followed this very viciously for about a week and a half or so, and I was watching all this stuff go by, and I was sitting in all these the NAR meetings, and I was listening to the attorneys speak, and at the end of the day, for the first probably 4 or 5 days, it was the proposed NAR settlement, and I said, nobody's talking about the one thing that really matters, which is it is a proposed settlement. So if people are unfamiliar with how the back and forth when your litigation goes, if there is a settlement proposed, that doesn't mean that the other side even saw the settlement yet. So we're making a lot of plans and issues and problems that could be absolutely nothing.
That will come out of it.
Right. It could be, what are the sellers that are suing after? And it could be that, well, we'll give you, take it off the MLS, we're removing all this, and it's all good faith. And so the sellers may just we want some cash. We don't give a shit what you do.
Right.
Just give us the money. So it could some negotiation happen at that point. But at the end of the day, we're starting to change the way we do business, and I think there's no reason to get jumpy about it.
Right.
But if you were going to go that way as an industry, the buyers are going to be in control. Where everybody thinks, buyers agents now become listing agents. I've heard that a lot. Where they're going to say, well, why would I waste my time, energy, and money on a buyer where I have to get compensated by the buyer himself?
Right.
Untrue. You are just free. You're now free to compensate yourself by both sides or by other parties. So if you were to write a compensation agreement, I would like to get compensated up to 6%. Say up to.
Yeah.
So what if the seller wants to give you a point and the buyer gives you 2 points? Well, that's 3. You can take it and run.
Exactly.
But that's a half a point to a whole point bigger than what I got last time.
Right.
But what if I can do the loan? Now I got 2 points plus 3 plus 4. You know what I mean?
Exactly.
This could be the biggest opportunity for buyers and buyers agents, especially dual licensed mortgage loan officers and real estate agents and brokers. On the buyer side, we could make 2, 3, 4x what listing agents make. But it's how creative you get. It's how powerful you want to be. And at the end of the day, what value do you bring?
Yes, it's about the value. If a client wants to work with you because of what you bring to the table, there shouldn't be any issues in agreeing to a compensation. And then the more service you can offer, in case you mentioned loans and all this other areas of expertise that you can bring to the table, I feel like it's going to work just fine to a lot of professionals. It's just going to be a matter of arranging it a little differently.
Yeah, I've been looking for loan officers and real estate agents. I've been looking for people like those. So, and it's hard to find them because in the industry, you'll hear specialize in one thing. So, I'm a real estate agent. Well, that real estate agent only works these 2 zip codes, and these 2 zip codes, I have 8, families. Like, how granular do you have to be? Like, I prefer to work, most of San Diego County. Like, if you hit the high desert, I'm out.
Right. But that's where you draw the line.
That's where I draw the line. But why would you limit yourself to those people who may need your help and that education, that 28 or 29 things that you can provide to those buyers, right? Buyers or sellers.
Absolutely. And especially nowadays with the lack of inventory, most people are being forced to think outside of the box as far as areas of town that they want to live. And they're commuting further. It's just whatever they can get, it becomes that a little bit. So when you're out showing properties, you can't limit yourself to one area or you have one home to show.
Right. So I'm gonna tie a couple things back into the debt business, right? So if you're thinking about this, residential real estate is low inventory. There's demand. There's lots of demand. Interest rates have not fallen. So what you're seeing increased home prices with that high demand, increased home prices, but the rates are staying the same. So you're seeing that inflation. So if people who have the capacity to buy really should buy now, otherwise they're going to get themselves tangled up. It's counterintuitive, like to what bank rates said yesterday when the rates were saying, well, it may be wise to wait. To each their own. Right. But what's going on behind the curtain in the debt side is commercial. That's what's going to be the next big pitfall. So when you see, these huge multi-family buildings, the 30 units, the 40 units, the family units are going to be pretty stable, in my opinion, right? Because you have to live somewhere,
exactly,
right? And the rents are, because there's such high real estate demand, those rents will continue to slowly increase, 3 to 8% per year. So that's going to be stagnant. What's really taken a big egg on the face is commercial office space and commercial industrial. Right. So those are going to be really, really tough deals. Those are between 30 and 60, 70, sometimes % occupied. And those notes are all coming due. So as, the big banks and the big credit unions and all those that are holding these notes see the illiquidity of these financial institutions that own those buildings, those commercial properties, they're going to have to start making a choice. Do they take a loss or do they take the property back? Right. And the banks and credit unions don't want to be involved in taking the property back because they want to renegotiate, they want to sell the debt, they want to make a deal.
Exactly, especially a property like that. It's not like it's a residential single family residence. It's not that easy to turn. So I think that they will do anything they can to not hold on to those.
Yeah, that's where a lot of these hedge funds come in, especially for here in San Diego. I've got at least 4 or 5 hedge funds that are trying to buy these off of the banks. They're trying to buy the debt. They get that debt, they acquire that debt, and as the market starts to implode, now they turn those commercial properties, believe it or not, into these single family or condo map them. Right. So all of a sudden the big commercial concrete tilt-ups turn into condo maps. Now we have affordable housing in San Diego.
Absolutely.
And that's my vision.
And that's what we need. So if they do that, it will be definitely a great project to work on. That the demand is there. I don't see how they could go wrong with it.
It's just it's comical because it's availability, it's highest and best use, and there's opportunity. The problem is that it's the illiquidity and they're scared. They don't want to be the first.
Exactly.
So if anybody wants to be the first, I know the people. Let me connect you.
Opportunity is there.
Plug. Okay, so you've been in the industry for a long time. Let's go back to you because this is about me. So you've been in the industry, a year or two. You're with your company and you're doing very well. What are you looking like? This is pre-crash. You're killing it. Crash happens. What next?
Yeah, well, after the crash, I actually had to sort of diversify the services I could provide within the real estate realm because it tightened up a little bit as far as lending, especially immediately after, before the HARP program and some of those, programs that came in to help folks before all that.
I hate to interrupt you. What's the
Yeah.
HARP program? Just to make sure everybody knows.
It was a program that came in during the Obama era to help the people that were upside down with their mortgages. They owed more, and it gave them an opportunity to refinance at a lower rate so they could stay in their homes, especially people that were on those negative amortization loans that were becoming adjustable and at a much, much higher rate and seeing their payments increase drastically beyond their affordability. So that program helped them. It helped some of the folks that didn't have any equity be able to get a better loan and stay in their homes. Yeah, so it was great at the time, and it created opportunity. But between the crash and that becoming available, there was a little bit of a gap there. And then I saw that gap as an opportunity to help people that didn't want to keep their properties anymore, that wanted to sell, whether it was a short sale. They didn't want to foreclose. They wanted an alternative. So that's when I came in and acted as a listing agent to help them short sale those homes, negotiate a deal with the bank and walk away from it without having to go all the way through foreclosure and do further damage to their credit. And a lot of those people ended up coming back to me a few years later and repurchasing after their credit recovered. So
Perfect.
Yeah.
That's the best way to be.
Yeah.
So where were you finding those lists? Were they provided by the institution you were working with?
It was so easy, Anthony, the amount of people that wanted to. I had
Really?
more listings than I could handle at a point in time because there was just a lot of people in that situation, and that's what they wanted to do. They bought homes that needed repairs. They were underwater or they were moving out of state, and some people lost their jobs because of the crash. So there was no shortage of people that wanting to do something, to sell their homes. Unfortunately, it was sad, but I was glad to be able to help them get out in the least stressful way, not having to call the banks or get calls from the banks asking for money. I did all that negotiation behind the scenes for them.
That's
so
great.
They could just peacefully move out and just wait for the final negotiation to happen.
How was that negotiating with the banks? Did you ever call them up, be like, hey, this is going to happen, and they just slam the door in your face? Or
Yes, the amount of hours involved was insane because banks weren't prepared for this. Their loss mitigation department was probably one person.
Exactly.
And now all of a sudden you have tons of need for loss mitigation, negotiation. They weren't prepared. You have to have a lot of patience and a lot of time on the phone calling, faxing. Remember those?
Oh, yeah. Here, let me fax it to you.
Yeah, let me fax those 50 pages. That alone was a lot of time out of the day. And then you would call to follow up and they'd be like, what fax? So
why is this? So the Big Short, they had that scene where the fax machine was just going. There's nobody in the office, just printing documents. Oh yeah, I'm sure that's how it happened.
Yes, they would walk into the room and the paper would be all the way to the ceiling.
Yeah. Oh yeah.
Yeah. So.
Or you fax it the wrong way and it's just blank coming out the other side. Like, no, I have to redo it.
You're wasting all my paper. Stop it.
Right?
Aren't we glad we don't have to fax anymore? Wow.
Yeah. Oh yeah.
Don't miss that.
I remember I was because we had to fax a decent amount of documents for the debt business, right? Because that's how we transacted. And back in the day, you didn't have all these electronic, anything. So you had, when you bought, a portfolio of debt,
Right.
you had banker's box. A semi truck would back up on Camino del Rio South, where our office was located. This huge semi, and you'd have to just unload bankers boxes, floor to ceiling, and just unload. And then every single one you had to alphabetize, put them in its own storage area. And so, like, I'd say 20% of our office was people. The 80% was docs.
Wow.
Alphabetized, ready to go. And I looked around, and I was like, I must have been 10. I was like, what are we going to do with this? My dad goes, alphabetize them. I said, what, me? He goes, yeah, you know your ABCs, right? I said, yeah. He goes, get to work. See ya. So that was my job, if you will. And I got $20, here and there. And that's how I learned how to kind of get document generation and be more like proactive.
Right.
Because there was a checklist, and every single loan or every single piece of debt had supporting docs. Those supporting docs had to go off a checklist. And that's where I was like, okay, now I get it.
Yes, this is how it's done, and this is like the level of organization that needs to happen in order to be successful at this. You learned that at a young age.
I didn't have the aha moment till I was 33. It's unbelievable. I've just been carrying around this knowledge. All of a sudden, right in the face. There it is. So.
Remember when you were 10 and you did that? That's that.
Yeah, absolutely. Okay, so you're in it. You're in the crash. You're at post crash. You're helping people. You're getting them out, and then you've got your family going. How does that look? So you're post crash. You're successful. You're still with the same company?
No, the company that I was with at the time closed doors.
Okay.
So they shut down, and people went and did their different things. Some people opened their own companies, and with a few of their colleagues and things like that. But I just took that step aside to do the short sale, and like it kept me very, very busy. There was no shortage of people that needed help in that regard. But after a while, loans started to come back, and that's what I love to do. Don't ask me why. It's not for the faint of heart, but I do love it. So when the opportunity presented itself where there were ways to do loans and continue to help people in that arena, I went back. So I started working with one of my former colleagues from the other company that closed down, and I was there for a very long time. Yeah, took some breaks to do family stuff and to have kids and to spend time with my kids when they were little, which is great to had that flexibility. But
I sure know about that.
Yeah. But yeah, it's been great. It's been a good business to me, and something that I'm absolutely passionate about and love doing. There's no better feeling than to be able to help somebody from start to finish achieve their goals, whether it's a purchase or a refinance for whatever reason that they have, and they always do, to be able to see it through. It's really, for me, it's awesome.
So how do we get our clause? How did you come over to us? Because there was somebody, who was the intermediary that brought you to Johnny or brought you to me?
It was Linda. It was Linda Moss from Sierra Pacific.
What?
Yes.
Love Linda.
Yes, me too. So we would have long conversations, and I was doing a very independent model, kind of like what you had going when you said in the beginning before you went with Investment Realty Homes and Loans, where you were doing it all yourself. And for me, for my personality to have other people to engage with, I feel like it works better as far as keeping my mind organized and having a nice flow of activities, and not just being hyper focused on one thing and not the other. The weekly meetings kind of pull me away from one activity and bring me into another. What we're doing right now, it's something
fun.
That is different and it's fun. If I'm on my own, I think I would just stay glued in front of a computer, and that's all that I will do, and that's not necessarily the way the business is right now.
Yeah, right.
So
I'm so glad, because it was so. I actually didn't know you came from Linda. That's funny.
Yes, she said that. I need to introduce you to these folks over there, because I think you'll be a great fit, and they're looking to grow their lending operations, and they want someone who's seasoned. I think you guys would be a great fit, and she was 100% right.
Yay! I love that. Yeah, because we do our trainings on Thursdays, every Thursday, 10 o'clock, and it was super stoked to meet you and have you and talk about stuff. And you're the only person that participates when I ask questions. They're not rhetorical. I do actually ask questions.
So I'm always raising my hand.
Yeah. We did one actually today about the debt cycle, or not debt. So we had debt cycle, and then we also had kind of what happens. So as you rise and fall, so good credit score, something bad happens, you fall, and then you kind of get back up after about 2 or 3 or 4 years. So talking about that, and some of the agents really don't know how to read a credit report. Right. I was like, well, what happens if you go, you have your credit, you open the loan. Well, how many hard inquiries do you have? Well, you shop that loan. Guess what happens? You have 5, 10, 15 hard inquiries.
Yes.
They're like, well, do they affect you? I'm like, well, you have a window.
Exactly.
But they don't understand because they're real estate agents, and they don't care to open their brain about what does credit actually look like and what really affects you.
Right.
So I was like, oh man, I got this.
Yes.
I've been doing this since I can walk.
Yes.
So this is gonna be really fun. So I went and I went through each individual kind of. I didn't pull up with a credit report. I just went off the whiteboard. And I said, what happens? You applied for the mortgage, 10 inquiries, whatever it is, and you got the mortgage. What happens then? And they're like, you pay it? I'm like, yeah, well, you don't shit, you pay it. But what happens to your credit? Well, it goes on as a trade line. After 6, 7, 8 months, you have these little C's that go in your credit report, right? What happens if you go delinquent? You go 30 days behind. What's a little 30 that goes in there? Yeah. A little 60, a little 90. If you cure that, it goes back to C's. But those little 30, 60, 90 stay there. And those are the lates that we're talking about. I had that VA loan that came in on Friday. Right. Did you hear about that?
No. Are they behind?
Yeah, so VA loan came in on Friday. This was so crazy. The dude is super, super nice. What a good, he's a veteran, good dude. And at the end of the day, he was like, man, I trusted, a CCC. It's a credit counseling company.
Right.
And he said, yeah, the credit counseling company said, pay us, don't pay any of your bills. So he went from current on 12 accounts, 12 individual trade lines. He went 30, 60, 90 charge off on all of them.
Wow. And
it blew him to smithereens. He went from a decent credit score. I mean, he was right low fives. And I went, dude, they destroyed him, because that's what they do. They take it to charge off. They negotiate the debt, in half or whatever it is. But at the end of the day, that could have been solved
in a way
better way to prep him for the mortgage. So if you're really looking to kind of fix credit or get a better solution, like, talk to people like us. Like, we at least understand how to read a report, what it looks like. And what we do is say, if you've got 3 or 4 or 5 lates, we can fix these.
Yes.
And kind of have, instead of just throwing money away at a company that will take, a huge percentage of that. Because really, I think their fees are 20, 30, 40% of what they collect.
Yeah, so if you think about how much money they pay to that company, and perhaps they could have done it differently and used that money in a better way, and not caused that much damage to their credit, because that scenario you just described, it's going to be a while.
Yeah.
It's not going to be an easy one to recover.
Mm-hmm. And that's where, everything from student loans, consumer debt, and that's just preventing people. That's keeping the low and keeping the people who have, and the have-nots who have not. You know what I mean? So it's that huge, money disparaging system. So I'm not a big fan of it. That's why if we can help people, that's what we're here for. So
exactly. Before it gets to that point, and there are ways out there. Mm-hmm. They just need to get in touch with the right professionals.
Flavia, perhaps?
Yes, Anthony, perhaps.
No, not me. I'm going to give it to Flavia anyway. Cool. What else you got for me?
Well, we had a really good meeting yesterday, too, about reverse mortgages. That was very, very exciting.
Totally forgot about that. Hit me with it.
Yes. Well, I've always thought reverse mortgages is a great, but also greatly misunderstood product. A lot of people think about it as taking advantage of senior citizens, and they lose their house and the bank now owns the property. That is not the case. It's actually a great program, but some really interesting aspects were brought up at yesterday's meeting, such as the amount of people that are going to become eligible for those loans and how helpful they can be.
You could tell me it's the silver tsunami.
Yes.
I thought that was hilarious. So it's all the boomers. They're coming into the market again because they're leaving the house, right? So
Yep.
I just heard. I almost peed my pants. I laughed so hard. So what are you talking about? He was 40%. So anyway, I'm
The
interrupting.
number is very large of folks that are now transitioning into smaller homes, and or just not wanting to have that much obligation, even if they want to stay at their current homes. They're on a fixed income. Things are getting more expensive, so they're looking for ways to reduce their expense. And reverse mortgage is a great tool that can help people in a lot of different situations.
A lot of reverse mortgages, though, we're thinking that you get paid either one lump sum or you get paid monthly, right? Is that how that goes?
In some cases, depending on the equity that you have and what your loan to value end up being, you just eliminate your mortgage payment, and don't necessarily get money. Or sometimes you don't want to get any cash. You just want to do away with your payments. So it can be tailored to specific scenarios and needs. It doesn't have to be done one way, specific way or another. So yeah, it depends on what the person is looking to accomplish. But for a lot of folks out there, just not having to pay that mortgage, that sometimes they still had several years in front of them, that's a big relief right there.
And that's so funny that you say that, because the demographic that they're talking about has had that mortgage for over the 15-year mark. It's crossed that threshold of interest versus amortization, right? The amortization of interest versus principal.
Right.
So they're past that point. They don't want to give up that payment. The problem is that payment's it's too much for them now. So the huge amount of equity, for example, I was using kind of like my parents as a rough estimate, right? So if their house is worth, I'm ballparking at this point, $2 million and they owe $300,000, whatever. I'm just making the numbers up. So it's all that equity sitting there, but their payment's still high because they got that loan for the original 1.1. So they're stuck, and they're looking at this going, well, I'm paying mostly principal. Well, yeah, obviously, but at the end of the day, you've got to tap into that income. And what if their income goes down to zero?
Exactly.
And it's not like they have a lot of products to help them. It's like they have a huge retirement. So I'm looking at this going, if you can back into that with, I think we're talking about the HECM.
Yeah. Yeah.
What the hell does that stand for? Home equity.
Home equity.
I don't know. We'll figure it out.
Yeah.
Something. So at the end of the day, it's just tapping into the equity of the home, right? So
Exactly.
Having that to cash that money out, because there's a point where it's a 35 or 40%. You can kind of cash that out, whatever it is. I forgot. But take that money, and then you have that optional payment. You can you make the payments?
Yes.
Just like full AM. You could go interest only, which just keeps that loan at where it is.
Exactly. There's nothing added to the principal.
Yeah, or you could go negative amortizing, where you have no mortgage payment, but I think what they're trying to do is calculate the interest on the loan versus the rate of appreciation.
Right.
Where the rate of appreciation is not going to be caught by that interest rate. I think they got a little life insurance-y on me with the life expectancy thing. But
yes, exactly. That's all where it comes from, the calculations and how they figure out. It's all based on the life expectancy and the how much equity in the property. So we all know almost every Californian now is sitting on a pretty good amount of equity, regardless of when they've purchased. And for senior citizens, they sometimes see their income frozen and their expenses going up, whether it's with healthcare or health needs. So this is a really, really great tool that they can have. And yeah, there's other things we can get into with the life insurance and all that.
I'm going right in there.
Go ahead.
Shout out to my boy Daiju, who we talked about this at a bar, sitting there, and we're just hammering him. And I just got so excited. So shout out to Daiju. So he had a great idea. And I just started kind of thinking about this backwards, where if you've got your you've got your reverse mortgage, say you owe, this is the $1 million example, right? And you have $300,000 as your loan, $350,000 as your loan, right? Say you took that, house is free and clear, took that $350,000, put it in your pocket, and then you were able to have no mortgage payment for the rest of your life. Like, let's start there, because that's what that loan's going to be,
exactly,
on average. Then you take off that $350,000, you pay a term life policy. right? So now what will happen is you upfront, you front load that. I'm not sure. I'm not a life insurance guy, but you pay that out where the premiums are done, and you out of that 350, and then you can either live on the rest, or you could use that for investing, or whatever that option is you have. But then that life insurance, when you pass, that life insurance policy pays that loan. So now that loan essentially gets paid off. If you have additional funds, those go to the kids. And now the kids have a free and clear house that you took all of that standing equity back out of.
Exactly. It works both ways. You get to have the cake and eat it too, basically, because that's one of the biggest concerns with people getting into reverse mortgages is I want to leave the house paid off for my children. Well, that kind of solves that.
But they want the money.
Exactly. They want the money, or they would like to do away with a mortgage expense. So they end up sometimes having conversations in the family where maybe the kids will help them pay the mortgage because they don't want to lose the house. Well, what if there was a way where no one had to come up with any money right now?
Or got paid.
Yeah.
Got paid and no mortgage payment, and with the life insurance binder, now you all roll it together.
Exactly. It's really, really neat.
So you're paying yourself as kind of instead of paying a bank, you're paying into your life insurance, and so that comes back to you. So you're almost paying just your interest into yourself.
Your premium.
Yeah.
Your premium.
Your life insurance premium. So so the house is paid off. I got $350 out. Say a $1 million policy at that point is going to cost me. I'm just gonna make a number up, right? It's gonna cost me, $24,000 a year. I'm gonna do a 10-page, $240,000. 240 of that 350 goes away. I have 110,000 left in my pocket, and I don't have my mortgage payment. So at that point, the life insurance is paid. I just made numbers up, right? It's all good. But I have the 110. I can mess with that. I have my retirement, my other things for retirement. Mm-hmm. But my $8,000 Rancho Santa Fe property went from $8,000 a month to zero. So now I'm saving the $8,000. I'm using my tax-free money. I'm using my taxed 401k. Now at the end of my life, that policy pays this loan.
Yep.
You know what I mean?
Yeah.
Now the kids can have all of their, their inheritance or whatever they can have, and I don't feel guilty because I essentially saved myself.
Yes. The $8,000 a month.
The $8,000 a month.
Exactly. Yeah. So the parents don't have to worry about that super high mortgage payment anymore. They also don't have to worry about not leaving the property to their children the way they envisioned all their lives, and they have extra cash left over.
And it doesn't have to be in the parent's name. It could be in trust name. It could be whatever. Because the loan is the loan, which is, I think, pretty neat. And there's plenty of ways to get, and this is where we're getting around the tax kind of issue or the inheritance issue. I don't want to I think it's Prop 19. Ooh, man, Doug's going to kill me because we just talked about this like yesterday. So to get around that, you take the property out of trust using a trust loan and then refinance it out so there's no taxes on that transfer. There's no step-up basis. Anyway, Doug's going to slaughter me for not... we just talked about this.
I hope you're not listening, Doug.
Oh, my God. Okay, what else we got? I'm sorry.
Yeah, I feel like the reverse mortgage is a really exciting product, and especially with it tied into the life insurance. It's something that I definitely will be investing a lot of my time now in learning more of those details. It will be a great conversation that we should have again with more details down the road. But right now it's just navigating this market and trying to help as many people as we possibly can and getting the word out there about what we do and all the other services, with the credit and the debt situation, how we can help there, as well as the down payment assistance programs that I've been talking about for a while now. And a lot of my podcasts and talks have been about that program, and that is wonderful. I've been able to help a lot of folks with that. So there are some exciting things out there, to kind of help navigate this market.
Good. Well, I love it. If you ever want to come up at the Grand, so I love hanging out at the Grand Del Mar up there in the Fairmont and just sitting there and having cocktails and meeting people. So we should go do that. We'll chase some business up there.
Absolutely. Well, that's right around the corner from my house. So sign me up.
Flavia, thank you so much. I appreciate you being here, and we should do it again soon. Let's go get some drinks.
Sounds good. Absolutely. Thank you for having me. Appreciate it. Thank you, Anthony.